Hello everyone and welcome back to another video. It's been a little bit of time since I've done one of these last, but thought it'd be a good time to have a look at the market, see what's going on with Bitcoin as well, because things look like they're gearing up for, maybe a bit of a consolidation period over the next couple months. But there are people and other analysts saying that May might be a good time to see a bit of strength in the crypto market. So we're just going to unpack that today. Look at Bitcoin, look at gold as a safe haven, which is doing really well as well. And then look at Bitcoin's dominance as well. So that gives us a bit of an insight on the altcoin market and how that's trending as well. So I thought I'd start off with this little chart that I drew up on the Patreon last week, which is a Bitcoin parabolic curve. And basically, in this chart, we can see the blue curve here, which is what we call the parabolic curve. And it touches, as you can see, the Bitcoin's price touches on it at a few different points during its lifetime of the asset. So this one goes back to 2020. So this is about a 5-year chart. And we were speaking about the support that was hitting here last week. And we did mention that, this lines up pretty well with a few of our previous peaks in 2021 and, late in 2021 and early in 2021. And also here in March of 2024. So we've got the local tops here, the 2021 cycle peak, and then the 2024 local top here. So as we saw, this had started to like bounce a little bit of this line and creating a bit of support for Bitcoin. And this actually lined up perfectly with our parabolic curve as well. So since then, we saw it touch there. It's come up a bit and now it's back on that parabolic curve kind of range that we've mentioned. It is good to note that, obviously this being like a parabolic curve, like this cannot be sustained forever. This is only going to become more steep over time, and you can't expect that Bitcoin's going to hold that strength the whole way through. But it is a good indicator of, Bitcoin's strength against different traditional assets and zooming out over time. It's really good for us to look at the bigger picture because a lot of people can get bogged down by the fact that Bitcoin's come down 20-30% from its all-time high, which was this year. But, if you look at it in this bigger picture on this 5-year time frame, there's barely an asset out there that's actually outperformed it. And yeah, it's just a really good indicator of where we are this cycle, where we could potentially go. Maybe we do hold this, this parabolic curve and this support that we've mentioned here. And maybe we do start to trend upwards to 120, 130. Obviously, we want better conditions for us to be able to do that, but it's not like it's not possible. And like a few of those unfavorable conditions I've mentioned quite a few times before, but let me just mention them again. We've obviously got the war tariffs that USA are driving and Trump is driving. We've got, the geopolitical tension between Ukraine and Russia that looked like it was gearing up to a new level when Trump had paused its military aid. I think that was a bit of a over exaggeration from the market at the time because we did mention that as well, that every time we've seen a big geopolitical tension news feed come out, that it's actually marked a bit of an overreaction in the market. So since then, we've had a bit of a bounce, and that seems to have calmed down a little bit. Maybe it's just not in the news as much, but nonetheless, that is, something still to be cautious of. Other things are inflation's set to increase over the next 6 to 12 months, which is what Larry thinks, which the CEO of BlackRock said. So that's another thing that isn't favorable for any risk on asset, really, because of interest rates as well, having that direct correlation. But Trump is pushing the Fed to drop the interest rates. We do expect to have two this year. I think that's what most people think. I'm speculating we'll probably get one in June. There's maybe a chance we get one in May, but I think June's a lot more likely. And yeah, the pressure is on the Fed at the moment for that to happen. So that's enough said about that stuff. I think we should move on to the next part, which is Bitcoin's dominance. And this is another thing I covered in the Patreon, but I thought I'd like to break it down on video. So basically, what we have here is Bitcoin's dominance, and we've got 2021 here, and we've got 2025. So we're actually at the exact same level as we were in 2021 when we saw this massive drop down. And this massive drop correlates to the altcoin season that we had. So we had a massive push in altcoins. They started to perform extremely well. And obviously, as they took market share in the crypto market, Bitcoin's dominance started to fall. And we usually see this as like a trickle on effect in the crypto market where Bitcoin usually, you know, attracts all the liquidity and then it starts to trickle down so into Ethereum and all the other altcoins as well. So I think that there's maybe a chance that that's going to happen as well. A lot of people are speculating that, but the only issue is this cycle we've had a lot more institutional interest and obviously the government interest as well in Bitcoin. So that's been almost its own driving factor where it's kind of been able to outperform any uncertainty in the market or unfavorable conditions, like we said, around like the interest rates and stuff like that. Obviously, the other ones, like the old coins, obviously still have this unfavorable environment that they're trying to push against. But at the end of the day, we still kind of want to see Bitcoin start to show a little bit of weakness in the dominance before we have a massive altcoin season. But yeah, that's a really good one to touch on. I think that, maybe we start to consolidate or like chop around this area a bit more, this 61% to 60, probably 5%, I reckon we could get up to before we have a bit of a drop. But once we do see this massive sharp drop, as I mentioned in 2021, that's where we can kind of be like, okay, wow, maybe this is the time to be rotating into a few more risk on assets in the altcoins. But for now, we're just waiting on our hands to see what happens with those things and if we get a bit more confidence in those assets. But yeah, so that's a really good one to just have a bit of an overview on. One we're pretty much going to be looking at pretty closely just as a strong indicator of, a potential altcoin season. As you can see, this is a pretty strong trend, higher highs, lower lows, all the way up for Bitcoin. And we saw a little bit of a drop here, which looked like maybe we were going to get some type of altcoin season. And this was correlates to the direct peak we had in December, a big peak with meme coins smashing it, AI agents and all those different assets starting to take a lot of market share, growing exponentially. But again, they could not hold up to the macro uncertainty that we started to get once Trump came into office. And with that, we started to see dominance rise again. And that's why Bitcoin is king. Bitcoin does not really, care too much about those things because it's bullish catalysts and all the news around it with the strategic Bitcoin reserve and being, a safe haven and, the gold standard or like a digital gold. All these stories that it can feed off make it a lot less receptive to this negative news compared to altcoins, which aren't globally adopted. Anyway, I thought we would push on to not digital gold, but real gold. And here we can see in the past, year, basically, this is a 2 year time horizon here. Gold has absolutely been smashing it. And I mean, it did chop quite a bit since Feb 2024. So let's just get rid of that for now, because I think this is a bit more important to look at just the last year. In the last year, yeah, it's basically pushed from about $2,000 all the way up to $3,000, which is a massive move for such a large commodity like gold. And often we see these massive moves, especially in like a store of value like gold or a safe haven, when there's macro uncertainty and we don't know what might happen. So I think a lot of people were very scared from the Israel and Iran war. Also now US getting involved with Ukraine and Russia a bit more. That's caused more uncertainty. As you can see, a bit of a jump up there. That's also from the tariffs as well. So the tariffs have caused a massive push in gold's price, because I think that, people were even predicting a global recession. So that's a massive thing that could really impact a lot of people's lives. So that's why we're seeing quite a significant risk off when it comes to digital assets and stocks and equities and anything that is basically known as being a risk on asset, and into things like commodities and gold that have been known to, yeah, act as that store of value and safe haven play when things do go bad. And when we see such massive moves, it is one of those things where we kind of have to think like, okay, what are people scared of right now? Like, is this actually bigger than we think? Is who's driving the price of these? Is it the government? Is it institutions? Maybe it's not retail. And if we can figure out that pretty early on, we can actually gauge a better understanding of the macro conditions of the world, because obviously it's very hard just to go based off news when half of it, is bias a lot of the time, and a lot of it isn't told to the full truth. So yeah, this one obviously being up so much, especially like this candle here, like that was like a almost like a 2% candle on the daily that we saw the other day, which is just massive. We never see those massive moves for commodities and gold really. But we do have to look and step aside from this and think, does something bigger have to play here? Is the world actually gonna start to experience conditions that we may have experienced in 2008, which was the last global financial crisis? I mean, that is all doomsday stuff, so let's not get too ahead of ourselves, but it is always important to prepare for that, because it does look like some people are with this increase in gold's price. So you can kind of correlate that to maybe just a bit of caution from investors. And yeah, they probably are looking for a bit more certainty around where the macro factors are going to lead the world. And I don't think it's a bad thing to see something like this, because, as everyone says, we do correlate gold to Bitcoin in a way. So there's a direct correlation, I mean, with Bitcoin being called digital gold for a reason. It's because it acts as a commodity and it is a store of value for so many people. And it has acted as a store of value for basically the life of the asset. So that's actually becoming a much more cemented story for Bitcoin. Now, it'll be really interesting to see if we have these, factors play out, if they're gonna, act in a way that creates more investor confidence in Bitcoin, because, if that's going to be a safe haven or a store of value, maybe that's what is needed for a lot of investors to start to shy away from the US dollar or other risk on assets and see Bitcoin less as a risk on asset and more as a store of value. Um, I guess that's really all I wanted to touch on for today. There is obviously a lot of other stuff going on in the market, super choppy at the moment. I think we're going to probably consolidate for a little bit, to be honest. That's my opinion, just as we wait for some bullish catalyst to come through. And I think that's going to probably be the next rate cuts in the next couple months. Maybe we might get a bit more of a roadmap around Trump buying Bitcoin for the USA, because obviously the most recent announcement for the Bitcoin strategic reserve was just the holdings that they currently have. And I think a lot of people were left a bit disappointed around no buying pressure from the USA. But maybe we get a roadmap around how they can accumulate a bit more without affecting taxpayers and having them pay for it. So if that comes, that's going to be a massive bullish catalyst for sure. Otherwise, rate cuts are going to be big, and we're looking probably for that to happen in June. So maybe this is a type of time where, it's going to be a bit of caution in the market. I do think that anywhere around this area is a really nice time to start to dollar cost average in. Just as as we're aware, $70,000 is very close to the previous peak in 2021 and in 2024 as well, and that's going to act as quite strong support. And we probably don't get to touch that point exactly. So, if you've got a long-term approach, a dollar cost average is always smart. So that's kind of what I'm looking at. And yeah, thank you for joining me today. And yeah, really keen to discuss a few more things in the future.